The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to our Tuesday Trade Talk, what's hot and what's not. So a little bit different than what we've done in the last few weeks. Today is really going to be about analysis, breakdown, and kind of basically looking for some of the best trading opportunities of the week. So I really appreciate you guys joining me this afternoon. We'll take about probably 35 to 45 minutes, and we'll do the best we can with it. With that being said, let me just dive right in because, like I said, we have a lot to cover today. So for some of you that are new today, just a little bit about me. I'm the president and CEO of Keep Trading Simple. The way that I trade is a little bit different than a lot of other people out there. I'm a price action trader. I'm not doing candlestick patterns, but I'm reading the way that price is printed on charts. I'm not a real big indicator guy. You're not going to see lines and all these things all over my charts. I try to keep it pretty simple. As crazy as I get is some I guess horizontal boxes and zones and things like that that I trade through. I've been trading since about 2000. I got in right around the tech crash. Perfect timing, my dad always said. So I've seen a few different market crashes at this point, seen a lot of different economic changes, conditions, traded traditional options, stocks, found currencies, fell in love with that one. Never really got super into futures, although I do know how to trade it. I do, do chart analysis on futures contracts. I just always prefer the Forex side of things myself. Found Nadex binary options a few years ago, absolutely fell in love with it, and now it's one of the kind of, for lack of a better word, it's a quiver. It's another arrow in my quiver as far as things that I like to trade. There are definitely times where Nadex is some of the best, gives us some of the best potential setups that we get out there. I've created a number of different strategies associated directly with Nadex, a 30-minute trader program. Many of you probably recognize that name. I've also done 5-minute binary courses, and those were basically created for traders with full-time jobs. Most of us are basically bound at home, shelter-in-place orders for everything that's going on. So we all have a lot more free time, and our full-time job is sometimes trading now. But again, it was meant for people on the go. I'm homeschooling 2 kids and taking care of a 3rd one, so a lot of irons in the fire, but that's why those programs were created. New in 2020, we also launched a weekly market levels and breakdowns newsletter that comes out every single week. Another fun thing that we're able to do for our traders today is some of that analysis that comes out in that newsletter, and I wanted to incorporate it as much as we could into these broadcasts. I was also an advisor for one of the big 3 banks, so I got to see this not only from a retail trader standpoint, but what it's like being on the inside, being part of the evil empire, right? Seeing kind of what their mentality and what their focus and thoughts and feelings and what the retail traders doing from the other side. And very, very informative. I learned very, very fast that all the people in the world that we're supposed to send that money to don't necessarily know as much as we think they know. With that being said, my wife is actually becoming a financial advisor in the moment. She's a financial planner at this point. And again, there's definitely a place for those people out there. So I don't want to beat them up too much. I'll be sleeping on the couch all week, right? With that being said, guys, I stay busy. These 3, I always tell everybody, when we're out of the house, I am a youth lacrosse coach. I absolutely love children. The guy on the left-hand side, he's actually the oldest. He's actually learning the trade now. I got him loaded up. He's just started his demo trading in the last week, so he's pretty excited already. They turned 10 in 10 days, actually 12 days, the 19th. So start him young, get him moving, and again, that's what I love to do. I love teaching people. So with that being said, that's who I am. Let me cover the Nadex risk disclaimer real fast. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile and investors risk losing their cost at the end of the transaction, including fees. The information presented here in this presentation is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And we will break those 3 different charts down today, and I'll go through those. Nadex is a registered trademark of the IG Group. So with that being said, let me cover our agenda for the day. So first thing I'm going to do is cover the upcoming news events for the rest of the week. News has been a very big part of the markets lately. Not only just the traditional economic news releases, but also when the president is speaking about COVID, it has definitely been moving the markets and changing things around. So through the rest of this week, this is actually a pretty slow week, so we won't spend too much time there. But I do actually want to point out one additional thing on that in that kind of analysis on that webpage. Then what I'm going to do is I'm going to break down into the charts. We're going to go through the indices first, then we'll cover Forex, then we'll cover commodities. When I say commodities, we're basically going to cover oil, gold, and silver. Okay. Those are the three biggest traders at this moment in time. And then, as a special treat for joining today, I have what I'm calling the COVID-19 assistance code. I will explain that more when we get to the end. So if you guys hang around through the entire webinar this afternoon, you guys will see what basically your code is going to be for the week. All right, there's going to be 2 codes, and I'll explain that a little bit more later. It's kind of it's my way of giving back to people that are stuck at home. Everybody, I joke around with, I was joking around with the guys from Nadex that I can't sew, and I don't have a big, manufacturing plant. I can't put my kids to work building masks and shield. But what I can do is I can give people education and hopefully help people that way. And that's what that code is going to be for. So I'll kind of break it down at the very end, but no sales, nothing like that, guys. I'm just giving stuff away for free. If you guys want it at the end, you're more than welcome to have it. All right. So let's go into the first piece of this. Let me drag something in real quick. You guys should be able to see it. This is just a website that I use, guys. You may be familiar with it. There are many different websites out there. DailyFX is a great one as well. I just happen to have this one up here because of the scanner at the top. It's one of the things that I want to cover. So this has given us the news for the week. So as of today, you guys can see we have some Aussie news tonight, and you may not be a currencies trader, but these are some great trading opportunities. It's actually one of my favorite times to trade, particularly with Nadex contracts, binaries in particular, is for these nighttime news releases on the Australian dollar. Now, if you're just a stock market or a commodities oil trader or gold trader, this is probably out of your element slightly. So if you're going to try it in demo. But these are typically some of my favorite opportunities to trade news. Again, like I said, particularly with binaries. Okay, so that'll be tonight, or actually that was this morning. Going for the rest of the day, there's really not much going on. Tomorrow on Wednesday, biggest news release for me is actually not listed here. It's considered a minor release as far as this website is saying, but we have oil inventories, which last week were absolutely enormous, 13.8 million surplus. Oil has been kind of crazy lately with Saudi Arabia and Russia, and we'll dive into that later, but that's basically my big release of the on Wednesday. Going into Thursday, we have OPEC meetings. Now, OPEC meetings are going to be going on all day. We will hear some information from that, again, particularly between Saudi Arabia and Russia, cutting production levels to help stabilize the price of oil. We had touched down into the 19s. That obviously went back up again. So it's been quite a trader. And then again, we saw surplus 13.8 last week. People are at home. People aren't driving. People aren't using this gas. One of my students actually said he got gas for $1.11 yesterday. Absolutely crazy, right? I couldn't tell you when the last time it was $1.11. Like I feel like I need to, buy some oil tanks for some gigantic tanks to put gas in the backyard or something. It's unbelievable, right? Thursday is a big day. So besides the OPEC, we have the ECB at 7:30 a.m., the ECB monetary policy meeting counts. Anytime you see news coming directly from them with monetary policy in it, it has the ability to move markets, okay? Obviously, with everything going on with COVID-19, that's also going to be a little bit more kind of a touchy subject. On Thursday, we also have Canadian unemployment, which is obviously a big deal, but it's going to be overshadowed by the unemployment claims in the United States. So looking at this number, right, you guys have seen what we've dealt with lately. Okay, 2 weeks ago, we saw 2 million first-time claims. Last week, we saw 6.6. This week, so far it's holding. They haven't adjusted it yet, but this number has been adjusting the day before at another another 5 mil, okay? Now, there's something important to understand about this number. People have been misquoting this left and right. This unemployment claims is not a continuous number. Okay, you'll see down here. It's individuals who filed for unemployment insurance for the first time during the past week. Okay, so this was 3 million, then 6 million, and they're doing another 5 is what they're saying this week. So this number is continuing to rise. So this is a very, very important to understand. Now, again, you can trade in the currencies market, the indices, the commodities. Gold has been extremely affected by this number as well. So that's going to be Thursday. Make sure you are familiar with when that's happening. It will be pre-market. Okay. Then we have some University of Michigan, consumer sentiment numbers. That's kind of important as well. And then going into Friday. Friday, you may not know anything about CPI, but again, CPI month over month, that's what the M over M means. That's an important thing to kind of look at because a month ago, we weren't in shelter-in-place situations. Now we are. Okay, and whenever you see CPI in here, what are you talking about? You're talking about the change in prices of goods and services purchased, kind of inflation, right? Consumer price index. Okay, so important to understand inflation. Why? because with interest rates and the emergency cuts that we had being low, a lot of the the economic high ups are going to be focusing on the CPI numbers. Okay, we don't want the economy to run too high. We don't want rampant inflation. The way to hedge inflation is typically gold. That's why gold numbers are moving. So this is going to be a mover on the gold commodity, as well as probably silver to a minor extent, but also it'll have the kind of a lasting effect into the stock indices as well, okay? And obviously currency. So it basically does everything for CPI on Friday. That'll be the big one, all right? And then it takes us into next week. So that's important. Another thing that I wanted to point out, and again, what I'll do is I'll actually come back to this because let's do indices first. This may be something you don't need to know what PIP is, but again, if you guys are familiar with what ATR is, it's basically how much it moves on average during a specific day, on one day. Those were exaggerated for a couple weeks. Now they are coming back, and in some of the charts you'll see that, but we're going to come back to this. So if you're looking at this at the top and you're wondering, hey, what are those numbers up there? We're actually going to come back to that. All right, so let's go over and let's start with, we're going to do the indices first. All right, so let's go over and come to here, and we'll go across and we'll start. Let's start with NQ. All right, so we're going to start on a bigger level. So this is NQ on a weekly basis. All right, so you guys can see we kind of had our all-time highs before the whole COVID-19 situation came in. That high was sitting back over here, back on what, 216, right, in February. A lot's happened since that time, right? Now, obviously, from there, boom, just straight down to the floor. And again, we bounced off some levels down here and ended up putting in a nice kind of move up. Now you can see we've had basically 3 weeks more or less of straight up, right? You guys can see that we are hitting an area right now where prices not only dropped, they kind of based for 1 week and then continue to drop down. And on a daily level, you can kind of see the same idea, right? You can see that price came down. We had this bit of a gap at base, and then it continued to drop lower. Okay, now if you guys are wondering what these different lines are, this is actually supply and demand for me. I focus a lot on supply and demand. You can ignore it for the purpose of this kind of larger time frame analysis. Now dropping down to 4 hours where we get a little bit more interesting, right? So inside of this 4 hour, you're seeing a lot of things happening around here. Now this is where we had a gap, right? So this is an area, and again, I'll change this color to make it a little bit more easier to read here. We'll change it to, you guys should be able to see that. All right, so this is an area where we had a gap, okay? Price rallied back up again. It gapped lower, right? Came up, retested that level, and then shot back to the downside. So price is actually approaching this. So in looking at this on a 4 hour level, kind of a higher time frame level, I have to be thinking, hey, listen, we probably should have been bearish when we touched this. And you can see what the response was. It actually pushed back down. So dropping down to the lower time frames, you can see here's that same kind of colored box that I drew before. And again, going back, you can see that was kind of the final of that kind of move, that gap move, right? We're hitting, and again, that was on March 6th before we had kind of the pop down, all right? So you're able to actually see, and actually I could probably do it off this. There's actually another little gap in here. So let's move this forward to here inside of that gap level. And you guys can see what we were touching. So one of the things I'm looking for is areas where there's buyers and sellers. And in looking at NQ, to me, it looks like we have some sellers sitting above. And it's a pretty interesting price level as well. Looking back, you can see that the last time price was here, again, it ended kind of the same way, right? Rally up, gap down. Rally, 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 rally. It made it right. And if you look to the left, right? Look to the left, boom. Start of this move was there's a big area, right? Now, same situation. Rally, 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 boom, gap, push, 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 and you guys can see how far this moved from this level over here at 83.11 all the way down to, I mean, really 69.30 before we had much of a pullback, right? Before we had that bit of a retracement. Well, that's the area that we're going off of right now, okay? So it looks like we've already missed it, but it's an area that we need to mark off in the future. Now, one thing I will say, this data is coming from an ECN, so I can give you numbers. You need to make sure that you find the numbers that match off your charting software because they will tend to be slightly different, okay? But in this case, you can see that one of the things that I always look for, whoops, oh, I drew that one. I'm gonna have to do it over here. You know what? I don't have it set up on this one yet. Anyway, what we're looking for is our level of risk in this one. We're looking at about 83.21 up until 83.89. Inside of that range is a potential shorting area for us. Now, I always like to match things up with Nadex, and there's a couple ways that I do this. This is kind of a analysis slash just kind of showing you. I'm going to do it on this first one. I'm not going to do it every single time, but this is what I do is I'm looking for areas like this. And then what I do immediately is I go over into my Netix platform, okay? Inside of my Netix platform, and I know that this price level is approximately at 83.21, right? I start to look at different areas and basically saying, if price is able to get back up to there, I have an acceptable level of risk. Obviously, we know that Nadex, your risk is the cost to get into the transaction. Is there anything that makes sense in this area? Now, first things first, again, something like the NQ, you always want to start over here in touch brackets, right? And if we come across, you can see, let's see, that area is approximately around 83.21. First thing I always start to look for is what are the floors and the ceilings over here in touch brackets. Now, today's not a strategy. It's not, this is exactly how you do it, but I'm just kind of running through the process of where I go in these steps. First things first is I would come over here and say, hey, listen, right here, the acceptable level is up to 83.94. That's quite a big level, 83.25 area. You can say, right here, here's one right here that's 83.35. Just happens to coincide with being a little bit above. 83.35 is kind of over here in the middle. Now remember, if it hits at 83.35 as a knockout bracket, it's taking it out. It's a built-in stop loss. You are out, right? Done. But if I'm getting into this position somewhere around that 83.23, 83.30 area, right? That gives me about 5 risk on this position. Okay, so it's kind of an if this then that scenario for me. So this is a touch bracket I'd definitely be interested in watching and saying, hey, listen, if this continues to push higher, that's about where I wanted to get into this position. That's right where the start of that selling zone is for me. And what it does is it keeps my risk small with a built-in stop loss. So that's kind of what I'm looking for touch brackets there. The other option too is depending on the time of day that it hits, this is an hourly chart. It most likely can hit it in the next hour, 2 hours. After a delay, I can also jump over here and look at some of the indices binaries as well. Kind of the same thing, and there's a couple different things that we can use in here. Obviously, this one just expired at 12, but you can go to something like one of the 2 hours or even the daily and do kind of the same thing. Use your risk to reward, make sure that it makes sense. Don't risk more than what the position, what it's showing you can do. But again, you come over here and say, hey, listen, this is up here. Again, this is more of a, let's see if it gets a little bit closer. Let's see what the prices are. Let's see if it makes sense. But if it's at 83.21, kind of the same idea here, right? Whoops. Make this bigger. There we go. You guys can see at 83.21. Was it 83.21? Hold on. Let's see. I'm sorry. Yeah, 83.21. You can see 83, kind of over in this range right in here. Okay, you have an 83.24, which is about the same. So when this gets closer to at the money, depending on if the price actually goes up to there, that's about when we want to start looking for, okay, listen, this is an at the money. Can we find an out of the money that makes sense for us to lower our risk a little bit versus, that's where it's a risk to reward discussion. Again, not today's session, but that's kind of what I'm doing, guys. I just wanted to make sure that I showed you that one. Again, you can do it with call spreads as well. I don't actually know. Let me see. Indice. Fortunately, it's a little bit late in the day already for call spreads, but if you wanted to do a call spread on that one, let's see. Actually, here, I'll drag this across too. There actually is a call spread as well up in 83.40. So it's a little bit higher, right? It's a little bit higher than what we were looking for, but again, that could be another potential option there as well. All right, so now that you guys know how I'm using the different touch brackets, now I can kind of go through the levels a bit faster. All right, so that's what we're looking for NQ. We're sitting up in a zone right there. And again, on the 4 hour, you guys can see it. It's actually peaked over here if you guys want to get a little bit easier analysis. All right. Now, S&P 500, let's start on the weekly. Very, very similar picture. This one has obviously been a bit more gappy, gap here, gap here. On a daily level, you guys can see we came up and we pushed into a level that's marked off. Now, this is a special pattern that I teach with my students. It's typically tends to be what we would consider a target area. Prices come up to that zone, so disregard it right now, but it is an area where there has been, kind of buyers and sellers. Now, on the lower time frame on this 4 hour, you can't actually see it. Okay, that is showing us that there was something going on in this area, and we're still kind of in that area as right now. That's basically where the zone is, but on the lower time frame. Okay, so it gives us kind of an idea. Now, there's a couple levels above it. This one, I'd probably let this one go a little bit higher. Of the two, I think I like the. I'm gonna check that area out. I think I like the NASDAQ better right now. You can see it's actually marking it off here. Let's see. Yeah, so this looks very, very similar, but on this 1 hour chart is what the other one looked like on the larger time frame. So you guys can see that there was this level here. And again, I don't like this level as much. I don't like how it's basically the same top. It didn't really peak. It didn't come up to here. But you still got a little bit of room to run if you wanted to get into something along those lines. So this one doesn't have as much opportunity. I think of the two, I think the NASDAQ is a little bit better option right now between them. Again, not a bad level. It did gap to that level. And again, for me, remember, my readings are going to be slightly different than yours. Make sure you check with the charting package that you're using. But it's 28.59 up to 28.87. Now, we are in an uptrend right now. Again, you guys can see it's been a pretty healthy uptrend from where we opened. Up, impulse, correction, impulse, correction, impulse. It is running into some sellers, but I think if we can wait for a little bit higher up, then I think it would make a little bit more sense for us to be getting bearish in this one. Okay. But even on the lower time frame right now, let's see if we got anything good here to get long in. There's some small stuff, but not really. I will be looking at this top here. That was a pretty strong push away. This could be a very minor level too, although we are heading into the lunchtime hour. So, but there is kind of something a little bit smaller sitting right there as well for kind of those kind of lunchtime traders. For those the lunchtime trading strategies, there is something a little bit going on there. So let's look at the Dow. So the Dow on the weekly, obviously this one came all the way down. You can see this one actually banged right into a weekly demand zone for me, and actually shot off and gone crazy since that time. This one is a little bit different in the fact that not only we pushed down, we kind of based up again. It doesn't have that same level. Now there is a small level sitting right here. Again, this is kind of one of those target levels that we've just actually hit. On the lower time frame, kind of the same area. We're kind of sitting in there right now. It looks like this one actually, let's go down to an hourly. Oops. Let's see here. I'd probably shrink this zone a little bit, probably up in that range. You'll notice the difference. The other two, right, the NASDAQ and the S&P, when we looked at this one, we weren't talking about something already into the move. We were talking about this one right here, right? It was that second attempt, almost filling the gap, and then the gap down again, right? So here's the 1 hour, and we're talking about this level, not this, but look at this in the S&P. What were we talking about? This one. You see the difference between this and this, right? So it's a little bit farther. So it looks like the Dow's a little bit weaker on this one. So this may be an opportunity to actually look for some short positions. Now, again, you guys can see, again, I adjusted it on this side, right? I adjusted it over here to kind of match the candles. Again, this is price action, guys. This is reading how, again, candle formation and things like that. I'm not looking at patterns. We're not doing, triple inverse Harami bear. I'm not doing that stuff. I'm basically looking at how candles were formed and what the reactions were off the candles. It's kind of price action 101. You can see whenever I find it on this side, you can see exactly what it did over here. Okay, it turned. And again, this is one of the reasons why I like binary so much, particularly the smaller time frames, as well as, if you can get in on a touch bracket on this one, this would have been a nice little move to the downside. Coming up here from what? 23,556 all the way down to 22,911. So again, that's pretty nice move to the downside, even on an hourly basis. And again, that's why I really like finding these zones. So right now, again, we do have a zone a little bit higher. Check your numbers as well, but 23,562 is kind of where I'm seeing a little bit of problems. On the lower time frame, let's drop it over here. You guys can see kind of similar. Again, this one, let's see, this one kicked in at, let's see, about 9:30 this morning. So this looks like it was a market open and it's kind of re-rallied back again. Also, just so you guys know, this piece down here, this just happens to be the 1030 reversal, but how about that for a reversal, right? Kind of a parabolic move down. And for some of you that attended the parabolic retracement webinar, this is exactly what I'm talking about. Big spike down and then a retracement back up again in short order. And again, this is pretty much textbook. And this would actually been the perfect setup for Nadex. Here's why. Because I have a level sitting right there. Had you done traditional, say, futures trading, right, and try to trade it in that market, what happened? You probably would have got stopped out. But had you taken it in a binary, boom, 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 builds back up again, your stop loss is protected because remember, the most you can lose is whatever the cost to enter the transaction was. There's not an official there's no stop loss in it, right? It just continues to move away. And in this case, it gave you a little bit extra breathing room, continue to push back up again. Obviously, depending on what binary you use, this was probably going to be a nice setup. All right. So that's kind of a bracket I'm looking for in this one, top and bottom. with that said, those are the three indices that we're covering. So let's jump over into the currencies. So for those of you that, again, are not really accustomed to trading currencies with Nadex, right? Again, same thing, right? Forex over here, and what I'm gonna do is I'm gonna cover each of these pairs in short succession. We'll see what kind of setups we have. I'm gonna do the same exact thing. I'm gonna drop down from the higher time frames to the lower. I'm gonna look for areas of buying and selling in each of those pairs. If you don't trade currencies, it doesn't matter. You trade it exactly the same way. You're looking for areas of buyers or sellers. Your strategy will be exactly the same. You're going to use touch brackets on 4 of them, right? There's call spreads and there's binaries. I'm looking for those areas, and then I'm setting the appropriate risk based off of them. So I'm doing the same thing. I'm not going to jump back over here, but I will cover these pairs real quick. So, oops, not that one. Okay. Oh, one other thing I wanted to, let me do this real quick. Let's put on that as well. Okay, so another thing I want you guys to see is obviously there's been a lot of craziness in the market. Hopefully you guys can see this. I'll make this line, let's make this a bit bigger so you guys can see it. There's what the ATR is. So if you guys didn't know, the markets have been a little bit crazy lately, right? Days of 500-600 up, down, left, right, crazy, right? Well, this is the craziness that we were talking about. Now what you're seeing is you're seeing the market starting to return back to normal movement. Okay, big difference in your trading style. This, look at the size of these candles. You're not going to find that anywhere back here. Now, we still have some big ones, but they're starting to get cut back down again. So the ATRs are coming back down again. That's very important to understand, because one of the biggest kind of, I don't know, the biggest, not the biggest obstacle, but the biggest adjustment for me when I started trading Nadex was understanding what's the correct strike to pick. Now, if you've ever said, hey, listen, I don't know what the right strike is, or how do I pick the right strike? Am I doing in the money, at the money? It's important to understand this, understanding ATRs. And we're actually going to have an upcoming webinar on that, as well as using ATR to determine kind of what strikes make a little bit more sense, and how to kind of properly match risk to reward. That's something that's coming up as well. But this is important to understand. So I'll throw this ATR because I want you guys to see it. All right. So let's dive across to the first currency. So first things first, Australian dollar. You can see that the Aussie has basically just been falling through the floor. Again, this is kind of what basically inverse of gold, right? I mean, this has just been kind of coming down, right? On a daily basis, you can see it kind of made, you know, kind of new highs, but boom, 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 and then just collapsed through the floor. Now it has put a kind of a turning point in, and it's kind of tried to make an attempt to, again, inverse of gold. Gold is doing the same exact thing with that spike. This is the exact inverse. 4 hour, what I'm looking for is it looks like I have some sellers up top here. Now, I do have a level of basing right here. Okay, now this is one little area. It's kind of in striking distance, and here there's a few areas, but nothing really I love. Dropping down on hourly, you can see we're kind of in a small area right now, although it's not really the best. It was tested, but not really the best area. Let's see, let's scroll back and look at that area marked off. Yeah, this area is not horrible. That's not too bad. That's probably the biggest kind of push to the downside that we'd have, and the risk is not that bad on it. So for me, let's see. Yeah, I don't like the way that candle forms. I would not have used that as a sell. Obviously pushed back a little bit, but would not have been a sell for me. Yeah, I'd be looking for this top level. I think the hourly is the best way to look at the Aussie. Again, this zone is going to be sitting up in, what are we at? 62.84 range. Okay, 62.84. I like the way that this kind of pushed off. It based here and then collapsed through. Again, 4 hours probably the cleanest. 4 hour levels for those of you that don't know are in currencies, great levels. Because we don't have that basically morning open and then afternoon close, because they are 24-hour markets, they tend to make a lot more sense and tend to be a lot better areas. So for me in this one, holding pattern, waiting for this to come a bit higher. And like I said, approximately 62.91 is where we'd be looking to get into some short positions. Again, have appropriate risk in here. And again, this is not saying it's going to bounce. It's just a potential area where we could have a turn. And again, if the risk to reward makes sense, then it's potentially worth a shot. Okay, we'll see. Downside, I don't really see too much. I mean, there's a little bit of a basing level here. If price comes back, it may use that as a takeoff point. But for the most part, I think this one we're basically a pro Aussie. And we're looking for this to come a bit higher before we look for any type of positions. Looking for the Aussie yen. Aussie yen, again, that same type of bounce. Again, not surprising. On a daily, this is going into an area right now. You guys can see, again, we had a huge push down and kind of a push back again. I'll do the same thing I did before. I'll pop the ATR on. I'll make the width bigger so you guys can see it. It's kind of the same idea, okay? all the currencies have the same thing. I'll go back to that news website and I'll show you the same thing. But this is what normal was down here. Then everything went crazy, and now it's starting to come back to normal again. Again, very important thing to understand when you're looking at some of these currencies, particularly with the Nadex contracts. So same thing, this one, the indicators actually already marked it. Let's see, we're up in an area here on the 4-hour. Couple different things to look at. This has been a prior high, although it looks like it's already kind of pierced at one time and it's kind of pushing through and having some problems. Let's see, on an hourly level, let's see. Let me shrink this down so we don't have too much in there. Same thing, I'm not a big fan of how that formed up there, so I would not be using that as an actual level. Let me go back a little bit further. This one I like though. Nope, not that one. Whoops, hold on. Actually, that one wasn't horrible. I'll take that back. I probably would have used that level. Looks like we're having some problems in it now, although we'll see what this does. It looks like it wants to continue to push higher, but again, we're running into some problems. Let's look at it on a 30-minute. On a 30-minute, yeah, okay, so we can see it now. So there was a wick over wick thrown in this one. So this was its rally up again, and again on the hourly, you can see it did push into a zone, pretty deeply into a zone, if I will say so. But you can see on the 30-minute, we got a nice push away, and then the green candles are making an attempt to push back up. This is what I would call a failure to go higher situation. If we are unable to push higher, again, that could be the sign that this is a potential short entry here. Some people will take this when it closes below. Some people would go lower on smaller time frames. As you can see, it bounced off a minor level on the 15, so it kind of came back, bounced, and is now pushing higher. But to me, it looks like it's starting to run out of steam. So there's many different confirmation strategies out there. If you do get a confirmation to the downside here, this looks like this could be a potential short opportunity. It's not the highest time frame. That would actually be much higher on the curve over here. But you can see there's a lot of stuff going on in this range here. It's not bad. And actually, I would probably put it here. Go ahead, see, did it mark it? No, it didn't mark it. I'll pull it all the way back off here. There's a zone sitting right there. Okay, so that would have actually been the zone that I was looking for, because we have a touch here, touch here, touch here. That is what the zone I would have used was. Okay. Let's see, let's check that on the lower time frames. Yeah, you guys can see there's the reaction off of that one. Yep, that's a good one. Yep. All right, so there would have been our short zone. Again, if we get a confirmation, there is a potential short in this one, but understand the price has already moved a little bit away from entry. Again, not surprising, again, on an hourly basis, you're talking about that one kicking in around 10 o'clock in the morning, right around that common reversal time. Euro yen. So Euro yen, you can see Euro yen is not having this. At least you can see highs and lows on the chart. We're kind of bracketed in from top and bottom. You can see we're just sitting inside of a weekly area of buyers, and price has hit that area a few times. We hit here on this green candle here and shot up. Hit it on the red, shot up. Didn't make it on the green, came all the way down to the red, and now we're bouncing out of it. So it's been a good buying level. Okay. On the daily, you can see the same levels down here as well. We keep coming to this level. And again, this is Price Action 101. If you guys are not familiar with Price Action, you're more than welcome to follow my channels. I talk about it all the time. This is a nice move out, and you can see that this one has been marked off. And again, boom, boom, boom. It's been hit multiple times on this one. One of the things that I use as well is risk to reward. I don't know if you guys can see that or not. Let's see. I'll put it dark blue. I'm not gonna be able to change it this one. I'd have to be in the indicator settings. But you guys can see, if you guys can see the white over here, one of the things I look for is typically 3-to-1 risk to reward ratios. And again, I match that with binaries. This one had a nice, nice bounce in the last couple of days. Looking at it on the 4-hour, you guys can see for the most part, everything is inside of one small area. Maybe refresh data. There we go. Let's see what we got here. Looks like the only entry would have potentially had to have been over here. So really in the last few hours since the US market is open, it hasn't really done much. No, not really. And there's not really grabbing any good clean levels. I don't really like too much in this one. We're just going to skip this one. I don't see any. There's no point. There's nothing really stands out that says, hey, this is going to be a tradable target for the rest of this week. So looking at pound, as you guys can see on the weekly, the pound is obviously gone very, very deep into the zone and bounced out of it. It is interesting. You see yesterday's candle is actually kind of inside of the big green. The pound has actually shown a lot of strength. And if you guys remember my message from last week that I said I saw pound strength coming in last Tuesday, 7 days ago, I said, hey, listen, we got to see we could potentially see more pound strength. We've kind of made this big push up again. It was pulling back again, and it's actually gone a bit higher. It's stalled slightly again with everything going on, right? But I am looking for this area up top. You guys see this zone here, approximately around what, 136.38 to 137.13. It will be different on your systems as well. That's an area where I'm looking for some type of a pullback, right? Any number of reasons it could get up to that area. On the one, actually, let's mark it off over here just so we can see it. Going down to a 1 hour, you can see it's actually sitting right inside of a zone, even on the 1 hour. Yeah, and I would actually put this a bit higher just to refine it. I would use this, and this is a bounce off the gap. So for me, I would use those two areas right there. Oops. Let me actually mark that off so we can see it just a little bit better. We're going to change that to gold, and we're going to make it a little thicker so you guys can see it. You know what? With the gray, you can't really see gold. Let's go and use, there we go. That one works. So let's take that off. Let's get this. Let's drop this here. Okay. And boom. So now we're looking at levels potentially around 136.64 to 137.18. Quite a large range, right? Again, the pound yen is a mover. Okay. Same thing with ATR wise, right? I don't know if you guys can see this or not. On the daily right now, the daily ATR is 266 pips. That's a lot. It typically is between 110 and 130. So it's about double what it normally does. You guys can see it right here at the bottom of the screen. Let's go change this. Double. Bam. You guys can see the ATR is pushing back down again. So at the ATR peak last week, we were 373 pips. We are back down to 266. You can see it is starting to come back into more what's normal. And that's important to understand whenever you're trading anything. Always pull this up to see, are we within kind of the historical volatility, or is it a bit crazier than what's normal? And again, right now it's a bit crazier, but again, it is starting to push higher. So for me, we're in a wait and hold. If we can get back up to that zone, I do like that one on the hourly. I think that's probably the best area to start looking for some short positions. As far as kind of getting longs in that one, there's not much sitting down there. There's a little bit of a zone, but I'd probably wait till we get back down to this 132.68. With Boris Johnson, and I haven't watched the news today, but I know Boris Johnson got admitted to the ICU. Hopefully everything turns out okay for him. That will obviously put the country in a little bit of turmoil, just having that uncertainty back out there. And again, I'm still, longer term, I'm still carrying my bullish opinion of the UK. I feel like they were already at rock bottom with Brexit and everything else before COVID-19 happened. So I feel like their economy was already poised for recovery first. They were there, where ours is still kind of, pushing to the downside. So that's what we got going with the pound. Pound dollar. So pound dollar on the weekly, you guys can see very, very sharp just collapse, right? This thing just dropped. The dollar strength came in and just beat this thing down on a weekly basis. On the daily, you can kind of see the same thing. Look at this. This is just absolutely insane. I mean, this is what normal is. These little candles over here. Bam, this thing went crazy. This one has a 270 pip ATR, which is actually more than the pound yen, which is just absolutely nuts. Now, you can see that this one is running into some problems. And actually, if you look on this one, this is one of those target areas that we talked about. We literally ding right off the very, very top of it and started to push back down again. Again, this is more Boris Johnson and kind of uncertainty right now that we're running into. So this is what we got. I'll delete this. As you can see, we've kind of found a little bit more of a cap, and that was actually from last week, right? On Friday, we had a bit of a pushback, and we're starting to push up to it again. It's actually not a bad area with the fact that we got a nice red, we got a green pullback, touch the area, and then a nice red push away. Problem is, it's hit this area a few times. Okay, we've hit here once, we've hit here again, we kind of hit it again, we've hit it another time. Typically, my rule, and this is my personal rule, and this is something that I preach to my traders. Typically, zones are good to be hit 2 to 3 times. 3 typically the most. They typically break by the time we get to 4. So for me, in this case, yes, you can say, hey, listen, Brian, there's your indicator said there's a zone there. Yes, but one, in checking these off, you have one. Oh, hold on. Let me make this a little bit bigger. How do I make that bigger? There we go. Change this so you can see it. Let's go down to here. Let's pick a different color that's obnoxious. Nope, can't see that one. Looks like we need to do a dark color for you guys to see it. Let's do dark purple. Bam. So there's one. Okay. There's two. There's three. So what's happening for me is I'm looking for this, right? I'm looking for a break of number 4. And why? Because again, there can only be so many sellers here. They pushed them away, price rallied up again. They pushed them away again. They pushed higher, just higher than where we were before, pushed them away again. There's only so many people that could be selling from this zone, okay? There's a zone right here. You can see where the zone is actually at. So for me, I'm looking for a potential break above this. This is what my students know this one is the Harry Potter, right? This is a Harry Potter setup for us. A breakthrough, it's a momentum breakout is what it is. Breaking through the top side of that. So although there's a zone mark there, again, I'd be watching for a break above, really a break above 124.72 with a stop down here of 124.18. There's a couple different ways you could play this with Nadex, but again, looking for more of a break of that zone. If price doesn't break through it, again, no trade, no harm, no foul. It doesn't come up there. Remember, it's trading is an if this then that. It's not a where are we going in 5 seconds. It's an if this then that. If it does what you think it's going to do or what you'd plan to do, that's when you take a trade. So I'm looking for this one actually to go higher. If it continues to push to the downside, again, I'll wait till price comes back down into potentially this 119.55 area before I start looking for any type of good longs. On the hourly, same thing. It's pushed all the way down. So I'll be using the 4-hour for this one. So if we can get a break, lovely. If not, I'm waiting for it to come down here before we look for any types of turns and flips. Euro pound. So euro pound is just absolutely, it's just crazy, right? We were down here at 182 range, 181, 79-ish, right? All the way up to 195. I thought we were going to hit parity where 1 pound would have got you 1 euro. We got close. Didn't quite get there, and then we turned, and now we're stabilizing back around the 188 area. So looking at it on a 4-hour, you can see pretty healthy push to the downside, right? Remember, all markets do the same thing. Impulse correction, impulse correction, impulse correction. Look at this, impulse correction, impulse, and then we had impulse correction, impulse, and now to the downside, again, impulse move, correction, impulse correction, impulse correction, all the way down, and now we're finally kind of consolidating sideways. Looking at this on an hourly, a couple of things to note on this one. Again, because price is way over here, it's kind of distorting things a little bit. Let's see if I can, there we go, okay? Now what I'm seeing here is I'm seeing a bit of consolidation. Now, I typically like to trade trending markets. I don't mind, taking a risk, and again, your risk is entirely up to you. I'm okay with the way that I trade and the way that I reprice action, calling tops and bottoms. Now, if you're not, don't do it. I tend to like trading trending markets. This is not trending for me. What I'm seeing is, listen, we had a push up to here, and then it gapped back down to here and pushed down. And I'm also seeing that we have an area down here. What is it doing? It went from high to low, almost the high, almost the low, to high, almost the high, and we're kind of stuck in that same region. So what I'm seeing is I'm seeing sideways movement, consolidating back down again for basically the last week, right? Because looking back in time, right, here is April 1st. So for the last 6 days, it's kind of been in the same range. Well, guess what? A lot of people say, hey, listen, sideways market, you can't trade that. For me, I actually have sideways that I use with Nadex to trade it in a sideways market. So there are some setups on this one, potential things that you can do. Dropping it down to a lower time frame as well, you can see a bit more. You're actually seeing even more of a consolidated time, basically from here to here, right? We've gone from high to low, almost the high to low, almost the high, and then we're kind of smack dead in the middle. So for me, it's not necessarily trending. If you guys understand traditional options, you understand the power of how to trade, and you understand the philosophy behind kind of trading things that don't move. Okay, it can be done in Nadex as well. That's what I'd be setting up for this one. So not a big, strong trender on this one, unfortunately. Looking at the euro dollar has been kind of crazy, right? We went from high on the curve to low on the curve to back in the medium to back in the low to bouncing back into the medium again. So this one has been kind of back and forth, kind of craziness, but it's been pretty legitimate moves, right? We're seeing steady reds, green pullback, steady reds, and then we flipped. We flipped it and swapped it right here, right? Greens, red, greens, reds. For me, looking on the hourly, kind of breaking it to a lower level. Let's see what we got in here. For me, I don't like, so what I'm doing is I'm looking for kind of tops and bottoms and saying, okay, listen, this is kind of what my average range is supposed to be. We're starting to get back into the middle of that area, which I consider no man's land. And that's kind of what we have going on here. Let's see. Yeah, because if I'm using this as a bottom, kind of this is I'm using this as kind of the range that I'm focused on right now. We're kind of sitting right at that 50% mark. So it's kind of what I would say in, again, no man's land. There is an area right above that you guys can see that is not horrible. Let's see, how big is it? It's about 20 pips. So it's not actually a bad zone. Let's see if we can see it on lower time frames. Yes, we can. So for me, again, near term, currency market, remember guys, it's 24 hours, so you can definitely do some nighttime trading in this one. If price comes back up to this level, the risk on it is about 18 pips, if you understand what that is. It's not really a big, that's not a huge risk level, particularly in a 30-minute chart. That is approximately around 109.45 up to 109.62. So there is a potential short sitting in that area as well. Now, again, depending on what time and if price gets to that level, that would determine whether or not you're going to use a binary, potentially an overnight, maybe a 2-hour. Euro dollar is also a touch bracket. Okay, there's only 4, but it's euro dollar, pound dollar, dollar Swiss, and dollar yen. So this also has the potential implications for a touch bracket. Now, there is technically what, 2 days, basically 2 days left on the touch brackets. It's listing 2 days left, but that area is around 109.46. So again, looking at a touch bracket, if you guys are familiar with that one, 109.46. The closest one is probably this level. No, you know what? 109.62, right? Yeah, because we're looking at 109.46. So that's not bad. Look at that. So this one, the top of this touch bracket is at 109.62, right? If I put and bracket this area off, you can see right here, the entrance of that area is 109.46. The far kind of distal side is 109.63. Okay, 109.63, 109.62. So that's actually a perfect touch bracket for this level if we're able to come up and touch that. Now, I would prefer that it does it as we get closer to the European Open, or if it takes till tomorrow going into the US Open, or the US Market Open, because I want to get that additional volatility, that extra oomph. The Asian session, this one is not going to typically move as much. That's the overnight session. Okay, so that's a nice little setup as far as using a touch bracket. It keeps your risk rather small. And again, the touch bracket is matching directly up into the spot currency realm. So that's a nice one. And again, that's over here. Again, make sure the risk makes sense for you guys. And again, if you take something like this, it's entirely on you guys. You have to do your own analysis. You have to agree with my assessment of it. Don't take anything blindly because Brian said so. Okay, that's my caveat for any of these things, but I'm looking for a position if we can get up into that range. Dollar CAD. Dollar CAD, I have like a love-hate relationship with lately. You can see this thing is spiked up crazy. And I say love-hate because my wife is Canadian. So again, whenever we look at the exchange rate going back and forth, it always kind of rings it home for us, right? So when it was up at 146, I was like, wow, this is crazy. Let's take all our US dollars and send them to Canada, invest, right? Because we knew it was going to come back down. We're back down to 139. Looking at it on a daily basis. So this one is really just starting to do the retracement of this big push up again. It's had some issues over here on the daily at the current price levels. You can see we're finally breaking through. Actually, that there should be reset. We're sitting in a zone right now, but again, it's driving, it's pushing out, it's driving, it's driving. You guys can see on an hourly basis, it's made one attempt and then pushed deeper and then got bounced and is pushing back down again. So for me, this one to me looks like this wants to continue going to the downside. For me, price gapped over here. This zone is going to matter to me, the zone over here at 137.74. So what I'll probably do, although the price is a bit a ways from that right now, you're talking about 160 pips, which on a daily basis, the daily ATR is 137, which is not correct because all these big ones. This one is typically around 70 or 80. So this one has a bit, it's got about a day or two. This one may not be something until next week. But if we can get back down to that 137 level, I will, again, we'll see how the arrival looks, but this could be a Sunday or Monday trade next week, looking for a potential long on this one. All right, and dollar CAD. Now, dollar yen, obviously, again, is affected a lot more like the stock market. You can see on a weekly basis, down, up, down, up. This one's been crazy. Again, bounced off a nice daily level 2 weeks ago. I talked about this in our assessment last week, that it looks like it was hitting some levels, but it did take a nice turn off a daily selling zone. So for me, currently right now, I'm focused, I know there's a lot top and bottom you see zones, but I'm focused really on what happened inside of that range, okay? On the 4 hour, gives us a little bit better of a kind of a view in here, all right? I'll delete this to make it less confusing for people. I still think the top is probably the best, but again, on a daily basis, that zone was kicking in right there, okay, which is the kind of top level of this one. So there's kind of an aggressive and there's kind of a conservative entry for this one, right? Again, we're a bit of ways away from it right now, but if we can get back up into that 111 range, I'd probably be okay with it. But again, you may get front run in this position if price does not come above that line. So just be cautious with that one. On an hourly basis, you can see we actually have a zone just a little bit above. This is, again, one of those hidden zones kind of in the middle. It's called a wick over wick. We are pushing away from it. The risk is about 10 on that one, so it's rather small. But again, for me right now, what I'm worried about is this. We're kind of stuck in between this top and this bottom. We're kind of at the 50% mark, so it doesn't look like there's anything here. I'd be much more willing to go into a long position if we can get all the way to the bottom. There are minor zones here, but I think, again, if you know how to set alerts, there's not going to be a trade on every single position. Set an alert down here. Give yourself an alert down to like 107.40-ish range. When it comes back down, this would be a better area in my eyes. It makes a little bit more sense to be looking for long positions. There's a minor position here, and again, depending on what time of day it is, there may be something in there. Zone's okay. I think, let's see. This one here is probably a bit better. Again, looking for something a bit more aggressive. Put yourself somewhere. Again, alert yourself to come back and see what the formation looks like and see what time of day it is around 108.40. So it looks like those are the two. This is a little test is on 30 minutes. So those are the two I'm looking for. As you guys can see on the small time frame, it has kind of chattered back and forth. It got front run. You would not have gotten into that position. My guys are always like, look, it worked. No, it didn't. You guys would not have gotten in there. Yeah, you're gonna miss it by about 4 or 5 pips. So there's something sitting in there. You guys just missed the downside to that one. Again, you're seeing it push down. It looks like it will come down here and kind of stabilize itself down to 108.75, about 10 pips from where we are right now. So for the most part, this one will probably slow down until the afternoon for the next couple of hours. Lower time frame, guys, if it does pop for some reason, it is giving you 2 shorts. I do like the top one better than this bottom one. So again, smaller time frame. Again, if you're looking for something in the overnights, 109.21 is a potential trade setup. All right. So let's go over to gold, silver, and oil. We'll start off with gold. All right, we'll start off with gold. So gold on the weekly, you guys can see we were at all-time highs, and then bam, slam back down into a weekly level, and then pop right back out again. These weekly levels don't happen often, but this is just it's just an absolutely enormous move out of it. This is the stimulus, right? When the stimulus kicked in. So you guys can see on the lower time frames, we're bouncing back. So we're getting back to an area where we're going to potentially be looking for some shorts. Okay. Not at an all-time high on this one, and again, make sure, again, this is actually through an ECN, so the prices are slightly different, but make sure you're kind of keeping focus on what we have on your trading platform. As far as the way that this one is forming, it's running into some areas of sellers for me. Again, you're seeing one small area here, you're seeing another small area here. On an hourly, let's see, can we even go back and see? Let's place price here. Let's go back. Yeah, there's some stuff here, so let's see. So on an hourly for me, I'm looking at a higher time frame zone there. And it looks like we have a lower time frame. So you can see right now in gold, it's really just been chopping back and forth. Let's jump down to a lower time frame. It looks like up at 1694-ish is where some of the potential shorts are coming in. Yeah, let's see, let's drop this one lower. Let's go down to the lower time frames. Let me refresh all the data. There we go. Yeah, you can see this one is really just choppy. There's a little bit of a short, but really nothing. Yeah, this is just this is more or less just chop. Yeah, this one is it looks like it ran into something and it's just gonna chop sideways on us. So yeah, nothing really. Gold, nothing really for me. Like I said, it's just sideways. The bodies have basically been kind of, going on top of each other. Now, I will say, as far as a trade setup, I don't have one for this one, but looking at this, I will say that I am probably a bit more bearish. We pushed up something knocked us down here, right? Something turned it around. Then what happened the next time it made an attempt higher, it got shut down here, right? We got shut down here. And if 2 wasn't enough for you, there's another one here. So again, a high, a lower high, a lower high, as well as you guys are seeing on the flip side, you can see that we kind of had a low here, right? And again, this is just simple trend, guys. You can do this in a number of different ways. Then you got another one here. We got another one here. And we got another one here. So for me, again, we are having some consolidation right now, which makes sense. Again, we're at lunchtime. It's 1 o'clock in the afternoon. But for me, I'm seeing these lower highs and these lower lows, which confirms to me that we're more kind of in a downtrend. I don't know. I don't see. Let's take this off. I'm going to see. Did this run into something? Yeah, it did. It ran into a small zone over here. It ran into a small zone, not the highest quality. I think that the one at the top is a bit better. But so yeah, for me, bearish gold is what my opinion is. Don't have a trade setup on it though. Now, one thing I want to point out, if you guys look at this gold on a daily, you'll see that gold came from high all the way to low, grabbed buying orders, and then shot all the way back up. Silver, conversely, on a daily, shot from high to low and has only made it halfway back. Okay, it's only made it halfway back, and it looks like there's a zone sitting right there. Okay, on a daily. Dropping down to a 4-hour, yeah, you can see it. It's actually this lower one. We touched the higher one here, but there's actually two. There's actually a zone sitting right here. There's one, and there's actually one sitting right above it right here. Okay, but we're actually sitting at kind of one of those little sneaky zones that we talked about. Let's see on an hourly. Yeah, hour. Look at this big spike up, gap kind of came across, and it really hasn't moved much. It's the same thing, kind of the thing I just did a second ago. We're kind of in an area where we could be shorting. Let me see. That's probably fine, that zone there. Again, larger zone. This is not something I necessarily take. Let's see. 30 minutes. There we go. Let's see if 15, I can make that any smaller. Nope, that's good. All right, so it looks like, yeah, there we go. So there would have been your entry. Would you have gone, let's see. I'm curious to see now if that would have hit. Nope, you wouldn't have made it. It was close. It was almost a 3-to-1 to the downside. It looks like it's starting to push again, but kind of the assessment's the same on this one. I'm sure some of my guys got this one, this 1530 to 1550. Same idea. Again, no setup, but what am I seeing? I'm seeing one here. I'm seeing another attempt here. Whoops. And I'm seeing one more here. All right. Man, I keep getting off on this. My arrow skills are being bad. So again, lower highs, the lower lows have been stabilized a bit more, but again, coming up from an area like this and then having one high, a lower high, a lower high, again, there's technically, I guess there's another one here as well. There's another one right there. That one was much better in my placement. You guys will see. Low, 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 drop into the downside. So that's what we got. Last but not least, oil. Okay, oil has been nuts. You guys can see we're at 65 all the way down. We've stabilized a little bit. We're back up to that 25 area. Again, came all the way down to 19 on a 4-hour. Again, we pushed high. We opened. This was a standard kind of weekend bounce for what we're looking for. So you guys can see here's where we ended Friday. We opened below. We wanted the gap fill. We ended up missing the gap fill by just a little bit. It is definitely bearish again until we see the true nature of what the cuts are going to be. This will probably go down. Oil. Again, inventory report is going to be on Wednesday. It's very important. And then Thursday, remember Thursday, we have the OPEC meeting, right? Thursday, we have these OPEC meetings. And again, this is where probably all eyes are watching oil. So for the week, I'm going to probably say I'm going to be bearish. Most likely, we'll see what type of setups we are able to get into. Let's see, cycle that through. That zone should actually be gone now. I'm not sure why that zone's still there, but should be gone, but it's not. Yeah, there's nothing. I'm looking at this area right now, and there's really nothing in here. So waiting for this to come back down into this kind of 2350-ish range, and we'll see what we're able to do. But yeah, this is going to continue to push the low side. This zone will actually be gone in a bit once this candle closes in the next 18 seconds. This green zone will be gone. And again, remember we talked about touches. 1, 2, pushed above. 3 is what broke it. That's why we talk about, how many times does a zone have to be hit before it typically breaks. Actually, there was our first touch. I don't know if you guys can see this or not. Here's touch 1. There's touch 1. There's touch 2. There's touch 3, and then boom, it broke. So number 4. All right. So that's oil. All right. So with that being said, guys, that's the last bit of the analysis in here. Let me go back and let me show you guys again what I have as far as the COVID response. So those are the indices, Forex and commodities. And let me explain what the COVID-19 assistance code is. Like I said, I can't knit, I can't make masks, but what I can do is I can help share education and experience with you guys. So what I thought would be cool for you guys that attended today, I'm going to give you one word of a code. It's a 2-word code. And what you guys are able to do is you're able to go to the website and redeem that code for a free class. Okay, there will be 2 classes that you can get for free. One of them is the Nadex 5-minute binary course, okay, which was a big hit. Number 2 is actually going to be a course based off of ATRs. It's going to be based off of risk and really how to start your Nadex trading in volatile times, because we've never seen anything like this. So that's kind of the other option. Either of those courses you can get for free, but what you need is you need 2 separate words, okay? So what that looks like is this, okay? My fancy little graphics over here. What I'm going to do is I'm going to give away 25 free courses. I actually may extend that next week depending on, we have more people today than, I'm going to make sure that everybody who attends can kind of get access to it. Like I said, I can't knit, I can't do those things, but I can give away experience and education. So the 2-word code, what you're going to do is you go to the website, you put the 2 words in, you get it 100% absolutely free, no charge, no gimmicks, no nothing. You get the course, you get lifetime access to it for forever, how long the website is sitting up there, you know? First word that you guys are going to need to put in is Nadex, okay? You don't have to go there each week. Basically, if you attend next week at the same exact time, I will give you the second word, and that will be your coupon code, which will give you a 100% off coupon for either of those 2 classes. It only works for those 2 classes. That's it. But that's all you got to do, all right? So with that being said, guys, make sure that you guys are attending next week, same time, Tuesday, April 14th at 12 p.m. We went a little bit long today, and I hope that's okay. But again, mark your calendar, write down code Nadex. And if you have any additional questions for me, you can catch me at keeptradingsimple.com, on Instagram, Facebook, YouTube is where I broadcast live every day, as well as Twitch nightly. Discord is absolutely free. You can go in there and bounce questions, or do it the old-fashioned way, the social distancing way. You can email me at support@keeptradingsimple.com, and I'll ask whatever you guys want to know. All right? With that being said, I will see you guys next week. Don't forget, write down code Nadex. You'll need it for your free classes, and I will see you guys next week. Have a good week of trading. Make sure you focus on that risk, and good luck. Take care, guys.